That's better. You should be able to see the screen and hear my voice. Got the platform working again. Sorry about that. Great. So is there anybody with us here today that's new to the strategy that we talk about here, which is just pure supply and demand, identifying, okay? Because again, our goal here, just to kick things off, is to, I mean, when you're trading anything, short-term, long-term, whatever, the goal is to figure out where prices are going to turn and where prices are going to go, right? Where are they going to move to? If we work backwards from that, because if we can identify that picture on a price chart, do we really need anything else? No, right? So how do we see that? What does that picture look like? Well, we know that prices turn at price levels where supply and demand is out of balance. Okay. And that means, at those levels, you have unfilled buy orders or unfilled sell orders. So another way to say all this is unfilled orders cause prices to turn, filled orders facilitate price movement. Make sense? Does everybody understand that? And if you don't, or you have any questions or you disagree, now's the time to get that out there so we can, make the next 40 minutes or so extremely productive. All right, let's go through the markets. Let's apply our strategy. And I have a whole list of markets here, but if you have markets that you want to look at, just put them up, put them in the chat and we'll take a look. Doesn't matter to me. I'll try to spend most of our time on the spot forex markets. But we certainly don't need to. I'm here for you. Absolutely, we can start with crude oil. Let's do that. Okay. Here's oil. One of the first things you want to do, again, your whole focus needs to be where our price is going to turn and where they're going to move to, right? Supply and demand. So your whole focus needs to be that. And if it does, now we look at the charts here. So you got small time frames on top, larger time frames on the bottom. When I look at this larger time frame, the daily and weekly, we see that price is in a big range for the last last year and a half, right? Price is just in this big range between 40 and 55. Most of the trading activity is between 45 and 55, this $10 range. So we know by definition that you can't have a significant supply-demand imbalance inside a range, right? If you did, you wouldn't have the range. You wouldn't have the range. Make sense? So we always want to, again, short-term trading, long-term trading, what we always want to do is focus on fresh supply and demand levels, zones that are outside of those ranges. Okay, so let's do that here. Work our way down to the daily. Let's come down to the 4-hour. Well, we can blow up the daily for a second, but you'll see there's really nothing here until we get out of that range. Okay. So on the upside, we'll go to a smaller time frame to look for some supply, but we just don't have it on any of the larger time frames. We just don't see it till much higher. There's nothing close to current price. The demand side is there and obvious, but we're very far from that, so no reason to spend any time on that. As we come down to smaller time frames, okay, let's actually go even smaller than that. We'll say, you know what? For a longer term position, a big, swing trade or something close to that type of position, we're just not near a price level that offers that. So I would just get that out of my head, which I have no problem doing that. And I would look for small time frame trading opportunities. Something that jumps out at me here is this level sitting just above. Now we'll go to a smaller time frame to confirm all this. But this is a trade that may meet our qualifications and may meet entry shortly. So we've got something to look at here. We have rally base drop and then drop base drop. Okay, So let's go down to a little bit smaller time frame and refine our little level here. And the only reason we would think about using this is because you have rally-based drop sitting above it, a couple levels on top of each other. And when we look down and to the left, we really don't have anything until down here. So let's put a little. Here's a little bit of demand. This is not like quality demand, but nevertheless, there's probably some unfilled buy orders there that would cause prices to stop falling and turn higher. So if that's where the level is, we're going to go just a little bit above that. And yes, there is a very mechanical way that we do that at Online Trading Academy. But anyway, this would be our entry point. Whoops. That would be our entry point there. We'll put our protective buy stop just above the area, and I'll go down to a smaller time frame to refine this. Okay. So let's do that. There, we'll get it right up there. So you can see inside this whole rally-based drop, you have a couple levels up here. There we go. And then let's make sure our target's in the right spot. That looks good right before that. And again, we have a very mechanical way that we do that. We don't have, we don't spend too much time on that here. But anyway, there's a little opportunity in oil, and that obviously is for if you're a more active trader. This is kind of like pretty much a day trade, right? Okay. All right, let's keep going. Yeah, oil expires much more frequently than others, right? The equity index markets and currency markets. So always go to. I'll give you a great website to use for all this. CMEgroup.com. That's the Chicago Mercantile Exchange. That's where the contract is actually traded. So traded through the Globex system. You want to trade the current expiration month, like the where all the volume is. So you'll see. Just go there and you get you'll get a lot more information than what you're even looking for. Yep. Let's go to the dollar Canadian, and then we'll look at the Aussie next. So keep an eye on crude oil. That one looks fine. Again, always make sure that you're good with the risk. We already know you're good with the reward. Here's a dollar Canada. So we always want to keep the US dollar in mind, but we cover that a lot in these FX Street sessions, so we probably don't need to spend too much time there. The larger time frame, the outlook has not changed. The levels that jump out on the daily chart and smaller are going to be this rally-based drop and then the supply zone over here. So let's blow up the 4-hour. We're into a level right now where it's very likely that the Canadian's going to fall a little bit. Probably from right up here, like right where it's at right now, is where it's most likely to fall from. So you could see a drop from this area. That may be why you're asking about the Canadian. Some of the logic behind that, if this area right here caused that, well, now you've just run into a level that's higher with fewer buy orders around. Okay. But let's look for a fresh level, even above that. Again, here's that whole area on the daily chart. And that's quite a bit higher, so I don't think we need to spend too much time. That's going to be this level up here. Okay, that's just basically the upper portion of this. All right. So again, you're into supply where prices are now. Demand is quite a bit lower. Let's look for the demand side of this. Probably the best chart to see it, the demand side is right here. got all these pivot lows and a bunch of activity right here. Here's where we finally bust through that. So this is the demand zone that we'd be looking at right here. So again, you're likely to fall from where price is right now. The opportunity to buy this either for a profit target on the downside or to initiate a long position would be right down here at the 120, let's see, 124, 124.93. Okay. Yeah, so there's the spot Canadian. Okay, there's a Canadian futures. Okay, so just the exactly. All right, so we found some supply, we found some demand, and there's a decent amount of room between the two. And so that's the profit zone, and the profit zone is very important. Okay. Let's keep going. Let's look at the Aussie dollar. I saw someone wanted to take a look at that. So we have a nice oil opportunity sitting there. Let's see what price is doing in oil, and then we'll come right back to this. So the price really needs to get up to, okay, 17. Okay. All right. Let's go back to the Aussie dollar. Just wanted to write a note so I don't forget that one. Okay, here's the Aussie dollar. Obviously, when you look at the larger time frame, you're closer to demand than you are supply, but we need to look at multiple time frames, right? So let's do that. So I think what you'll see here is come to the daily, that weekly can be a little it's not misleading, but it looks like, oh, we need to be buying really quickly, but that's still quite a bit lower. Okay. We do have an opportunity for a short position, possibly. Remember, when I identify these turning points, these supply and demand levels, it doesn't mean we have a trading opportunity. What else do you need to make sure there's a trading opportunity? You have to have a supply or demand zone for an entry point that meets the minimum criteria that we're looking for. Number two, you have to have a big enough profit zone. Okay, if you don't have both of those things, one or the other is not enough. So we appear to have a supply zone that would score out fairly high with our odds enhancer scoring system, and then it appears that demand is quite a bit lower. But let's confirm that with a smaller time frame. As we go down to the smaller time frames, the opportunity is never going to look as good, but that's okay. So we're right up here around 79.35. Okay, so that's all this in here. Let me just take a peek at the 60. That's the 30-minute. Let's get to the 60-minute. Okay, so with that, we would just go a little bit higher. Nice rally-based, really strong drop out of this area. So actually, let's just get our level on that other time frame. That's 79. Okay. So this just comes up here a little bit, that's all. Okay. Let's blow this up one more time. So there's the 52 right there. 87, you don't need all that. That looks perfect. Okay, with our stop just above that. And it appears that we have room all the way down to 76.20. So let's double check that. Nothing in here to worry about, right? In this rally here, there's no no picture of significant demand. Want to make sure we're good down to 76.20. So we're going on up. There's some demand, so nothing great, but some demand nevertheless. So that comes in about 76.90. So here's where that demand comes in. And again, you can see I'm being pretty surgical about this, but why not? If you so we put this just above 77. And again, there's a very mechanical way that we do this. Let's go 77.10 there. We'll make that a blue line for the target. All right. So our risk is to just above this. Again, very mechanical way we do that. So put a red line just above that. 85 is where that stop would be. So it's just above. Okay. So there's your risk. There's your reward. I want you to see, just like the crude oil, exactly how we set these up. Okay. All right. Again, any other markets you want to look at, we could totally take a look. Yeah, and again, bigger picture, the Aussie dollar is likely to go up with the dollar likely to go down. And remember, I'll bring up the dollar now so we can remind ourselves of where that, you look at the weekly chart, you'll see it's just got layers and layers of supply, right? Tons of supply up here. All right, we'll get another pop up here. You're looking at a bigger move down. Another pop up here and a bigger move down. And we do have a little bit of demand below, so we don't expect the dollar to get too crazy, but these are very, extremely predictable moves in the dollar. So dollar hits these supply levels and falls. Currencies against the dollar, likely to hit those demand levels and rally. Make sense? All right. I could pull up another market if you want. Just let me know. Okay. Yep, we can look at the euro. So we've been looking at the spot euro. Why don't we look at the futures? I think that's the one you wanted anyway. Okay, here's the larger time frame euro. Again, right in the middle, so don't need to spend any time there. Daily and 4-hour paint a little cleaner picture for us. And both are suggesting what? What's the 4-hour and down suggesting? Is the euro likely to go higher or lower? I mean, what would you say to that? What are they suggesting? Yeah, higher. I agree. Is that in line with what the dollar is telling us? Or the dollar is suggesting? Yeah. Okay. So the key is don't overthink it. All right? Don't overthink it. Make sense? Okay, so let's go. Yeah, let's go down here. We're going to end up on the 60-minute chart fairly quickly. So we're bouncing off this level right now, which again you'll see on the 60-minute. But then we have this level sitting just below. And let's take just the bottom part of this. So ideally, that first level is going to open up a nice profit zone on the upside for us. And that comes in 80. Yeah, so that's this level down here. So what happens often for people, if you're trading kind of longer term positions, I would say same thing when you're, day trading or short term trading. What often happens is prices hit an area, they move higher, come back to the area, and then takes off. And a lot of times in that second retracement, that scares a lot of people out of the position. And obviously, you don't want that to happen, because that first pullback like this, and then prices go up. This is important activity because you're removing the supply to the left. So then, now this space is open up, so it's pretty easy for price to fall. But when it gets down to here, that's where you usually have the bigger move higher. So that's how I would play this. So that's the, let's see, 1820. Let's just make sure I got the same area here. Oh, it's 1780. Okay. 1785. Oh, I'm sorry. All right. So that's this area down here. But what we don't see on the 4 hour is this thing right here. And this is key. So I would, I would take this area right here. So that's 118.20 down to 118 basically. Okay, and that's not a little day trade, because there's room all the way up to, you can get rid of this. It looks like a giant level, so we can get rid of that. Make sense? Right, this is, and this doesn't have to be your ultimate target. You can go for a much bigger move than this. But if you don't want to sit through a bunch of pullbacks and stuff, that's where you're likely to get the first, kind of significant pullback. Does that make sense? Okay. And that would be, remember, we're looking at the Euro futures, not the spot. Okay. Yeah, because ultimately in the big picture, the Euro has room to go all the way back up to, right up here. It could certainly fall before that. So there's not a whole lot to talk about with the weekly chart of the Euro. Okay. And of course, for all the FX markets, but especially this one a little bit more than all the others, you want to know what's going on with the U.S. dollar. You want to see where the U.S. dollar turning points are. You want all that. Okay, because that will really guide you. I would go so far as to say, often you can trade the euro without even looking at the chart. Just you can be trading off of the dollar chart when you come into key levels. I would look to buy there, yeah. I don't know that I'm going to take this euro trade. I've got to look at it a little bit more, but yeah, that's where I'd be looking to buy. I want to make sure that the dollar is into supply there also. And in these sessions too, I always tell you the trades that I'm in and the trades that I'm thinking about. So, okay, let's keep going. Any other markets you want to look at? Otherwise, I'll go through, why don't we take a look at gold? Here's gold coming off of that demand, that weekly demand. You can see on the daily, obviously, coming out of that area. Down to the 4-hour, we still don't have any supply until a bit higher. Looks like we just hit this little level on the, yeah, you can see it nicely on the 60-minute here. Okay, so we could see a little bit of a pullback from there. Again, not that big a deal. That's to be expected. Ultimately, gold should move higher, but probably off of demand. Anybody here trade gold? Oh, okay, good. And remember, for anybody else, just make sure you completely understand, what you're dealing with gold. This is a big money market. So this is a nice little level here. I would certainly expect a little bit of a pullback. You do have a little demand here, but that's okay. Okay. Let's go to. Let's look at the dollar yen here. Dollar yen is. Let me just pull up the daily because I've got this level in here. But if you really look, I mean, you've got from here, really all the way to here. And I'm not saying. Well, it's not actually not that big. It's really that. Okay. That's really all the all the stuff you have sitting up there. There is room for the yen to fall, so let's go to a little bit smaller time frame. Yeah, you'll see even when I pick up, it's hitting it's staying, sitting here at this demand right here, but you don't really have a whole lot to stop the yen from falling down to about 110 and change down here. So watch this guy. Okay. So keep an eye on that if you trade the yen. All right. I think we got through all the markets that you wanted to look at. I added a couple in there. There's my email address if you have any questions. I think oil's going in the wrong direction for us here. Yeah. So you can see that profit zone to the downside, it is pretty open. Still get an entry though, so just, sit tight, keep an eye on it if you trade oil. And watch that dollar. All right. And if you have any questions, you want to, another chart you want to send me and look at, or have any challenges with your trading, just shoot me an email, sseiden@tradingacademy.com. All right. Have a great day, everyone.